The adjusting process, part 3. We're going to summarize the adjustment process as well as talk about the adjusted trial balance. A brief summary of the adjustments: we have supplies, prepaid insurance, and other prepaid expenses. The adjusting entry is a debit to the expense, a credit to the asset. An example would be a debit to supplies expense, a credit to supplies, or a debit to insurance expense and a credit to prepaid insurance. And then, of course, here's the impact of the adjusting entry if it's omitted. Unearned rent, magazine subscriptions received in advance, fees received in advance for services. These are all unearned revenues. The adjusting entry is a debit to the liability and a credit to revenue. An example would be unearned revenue is debited, rent revenue is credited. Accrued revenues are services performed but not billed, interest to be received. An example would be a debit to an asset and a credit to revenue, accounts receivable, fees earned. Accrued expenses are wages or salaries incurred but not yet paid, interest incurred but not yet paid. We debit the expense, credit a liability. An example would be wages expense, credit to wages payable. Depreciation is the systematic process of writing off the cost of an asset over a period of time. We will debit an expense and credit the contra asset. An example would be a debit to depreciation expense and a credit to accumulated depreciation for office equipment. Now, here are the journal entries that were listed for net solution. So the supplies expense, insurance expense, unearned revenue adjustments, accounts receivable, wages expense, depreciation expense. Once these were journalized, they were then posted to the ledgers. Once they were posted to the ledgers, what we do is we actually write in the item, we will write adjusting. So we know that this was actually an adjusting entry, and then we go ahead and we record the journal entry. Notice that each account that was adjusted has an adjusting line and an updated balance at the end. Each of the accounts that were adjusted, again, have the word adjusting and then the entry and then an updated balance for these particular accounts. Now what we're going to do with these updated balances is we're going to create what is called the adjusted trial balance. Let's talk about preparing an adjusted trial balance. The purpose of an adjusted trial balance is to verify the equality of the total debit and credit balances before the financial statements are prepared. Here's an example of an adjusted trial balance. The accounts highlighted in blue were the ones that were dealt with during the adjusting process, and they have new balances. So kind of starting from the beginning to the end here, we journalize, we post, we gather the adjusting data, we analyze it, we journalize adjusting entries, and then we post those journal entries, and then we create this unadjusted trial balance. So, and then we have the adjusted trial balance after the adjusting entries. Basically, again, all we're doing here is proving that the debits and the credits have equality after doing the adjusting entries. This concludes the adjusting process.